Hey everyone, welcome back to Corporate Decoder, the place where we decipher the confusing world of business reports, and this time we've got a peek behind the curtain of the Federal Home Loan Bank of Topeka. And let me tell you, it is all about the money, the big money they borrow and lend out like a giant financial engine. Before we dive in, if you like getting these easy to understand breakdowns of important financial documents, make sure you hit that subscribe button. And hey, we've got a growing community on Discord where we chat about all things finance, link is in the description. So what exactly is this report all about? Well, the Federal Home Loan Bank of Topeka, which we'll just call FHLBank for short, is basically a big bank for other banks. They get their cash by selling these things called consolidated obligations. Think of it like them issuing IS, but on a massive scale to raise money. These aren't just any IS though. They're backed by all 11 federal home loan banks together. And get this, they are not guaranteed by the US government. That is a pretty important detail to remember. Now this filing, an 8K current report, is mostly about letting us know about new borrowings. They've put together a Schedule A, that lists the debt they've committed to issue. It is important to note that this mainly includes bonds and discount notes that mature in more than a year. They also include any debt where VEF stepped in to take over the main repayment duty from another FHL bank. We're re-looking at a snapshot of debt issued on the 17th of September 2025. There are several entries for the same CUSIP number, which is like a unique identifier for that specific debt. The first few rows show that FHLBank is issuing bonds with a coupon rate of 4.125%. These bonds mature on the 10th of September 2027. They can be redeemed early, which is called a callable bond, and the style of call is Bermudan, meaning they can be redeemed on specific recurring dates. The principal amounts are quite substantial. We see amounts like $15 million, $20 million, $30 million, and $40 million, all issued on the same trade date. This tells us they are actively raising significant capital. Then we see another block of debt starting on the 17th of September. Also with the same CUSIP, again, a 4.125% coupon rate with a maturity in 2027. These are also callable. The next few rows show further principal amounts adding to the total amount borrowed. It is like they re-saying, we need this much money, and here is how we re-getting it. Moving to the 18th of September, we see a change. There is a new CUSIP number, 3130B7-5, with a rate of 4.175%. This bond matures in 2030, a longer term. The call style here is American, which means it can be redeemed any time after the first redemption date. This indicates a slightly higher cost for the borrowed money, likely reflecting the longer maturity or other market conditions at that time. We also see another new CUSIP, 3130B7 UK8, with a coupon rate of 4.16%. This bond matures in 2030 as well. It also has a Bermudan call style. The principal amount here is $25 million. Then there is 3130B7 UQ5 issued on the 18th of September, but this one matures much sooner in 2026 with a coupon rate of 3.75%. This is a significantly lower rate, reflecting its shorter term. The call style is Bermudan with the next call date in December 2025. On the 19th of September, we see more debt being issued. There is a return to the 3130B7 TD6 CUSIP with a 4.125% rate, maturing in 2027, and then a new CUSIP 3130B7 UY8 with a 4.05% rate, maturing in 2028. This is another interesting one, a bit lower in interest rate. These terms like optional principal redemption and Bermudan, or American call styles, are important. Basically, optional principal redemption means FHLBank has the choice to pay back the loan early if it becomes beneficial for them, like if interest rates drop. Bermudan means they can do it on specific dates, while American means they have more flexibility. These are common features in corporate debt to manage borrowing costs. The rate type gives us clues about the interest payments. Fixed constant means the interest rate stays the same throughout the life of the bond. Other types mentioned, like conversion bonds, can have interest rates that change from fixed to variable or vice versa, or have other complex features. For these particular issuances, it is fixed constant, meaning the rates we see are the ones they'll be paying. And finally, looking at the signatures, we see Brad Gentry, who holds a key role as FEP Director of Funding, Hedging and Member Product Pricing, signing off on this report on the 23rd of September 2025. This tells us who is responsible for these financial decisions at FHLBank. So, what is the story here? FHLBank is continuously active in the capital markets, issuing substantial amounts of debt to fund its operations. This filing shows they issued over $165 million in new debt within just a couple of days. They are strategically managing their borrowing by issuing debt with different maturities and call features. The rates vary, which is typical with longer term debt generally carrying slightly higher rates. This isn't a report about record profits or losses, but rather a look at how FHLBank fuels its lending activities. Now, my take on all of this. FHLBank is functioning exactly as it is designed to, which is to be a stable source of funding for other financial institutions. Its continuous debt issuance demonstrates a healthy demand for its services and its ability to access capital markets. The risks here are inherent in any financial institution that borrows. Heavily interest rate fluctuations could impact their costs, and the fact that the debt is not government guaranteed means investors are relying solely on the strength of the 11 federal home loan banks. However, given their structure and regulatory oversight, they are designed to be a very stable entity. The main takeaway is that FHLBank is actively managing its balance sheet, borrowing significant sums at reasonable rates to support the housing finance market. Alright, that is our breakdown of the Federal Home Loan Bank of Topeka Fed issuance report. What is your take on these borrowing activities and what they signal for the financial sector? Drop your thoughts in the comments if you found this analysis valuable. Hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching, see you next time.